Hey, what is going on? Welcome to the stream, everybody. Do make sure you drop a like on the stream. If you are new, subscribe. Do me a favor of subscribing. And yeah, we await the FOMC reaction. We are 25 minutes away until Powell, the Federal Reserve announces the interest rate decision. We are 55 minutes away from Powell opening his mouth. So let's see what we get, shall we? Let's see what we get. But how are you all doing? Let me know in the chat who we've got going on. I've got 48 views, so everyone's loving, aren't they? Everyone's coming in for the FOMC show. Do make sure you drop a like on the stream. Let's get this stream out there. Let's get the algorithm in our favor and see how many viewers we can pull in today. Ibrahim, how we doing, mate? Florin, good afternoon to you. Good evening, actually. Hey, Scotty boy. Dave, pump my bags, mate. Well, your bags should have been pumping throughout today, mate. Hopefully, anyway. Good evening, legend. Yes, the gold sniper. Oi. Jamie, how we doing, mate? And good afternoon to you, good person. I don't know what that name is. However, thank you very much for joining the stream. Horich says, good evening from here. Well, where is here? But good evening to you. Thank you very much for joining the stream. Do make sure you all drop a big like on the stream. Subscribe if you're new. And if you're looking to trade anything today, do make sure you click that first link in the description, and I'll put it in the chat now. Sign up to BLOFIN. It is the best place for you to trade under a non-KYC account as well. So you just sign up with an email. And when you sign up with the Stonksy link, you get yourself some nice welcome bonuses as well. So do make sure you click that link, sign up today. Watching Caroline Levitt's press conference 2 now. Should finish before FOMC. Jalapeno, yo, has the oscillator gone from Stonksy? No, it's here. But it is getting a revamp. Jalapeno. But on mine, it's still here. I can still load it. But it is due for getting an upgrade soon. I don't know how soon, because that's not under my task force. But I know it is on the list. But no, it's still there. Should be anyway. Trying to pop it back on gold, but can't get it. I'm not too sure then. I don't know. What, when you load like a new Stonksy? I don't know. Is the honest answer, mate? I don't know. I don't know why it wouldn't be loading for you. Pop, are you in the Stonksy Discord? You should be. So pop a message in and tag SMFC and just say like, the oscillator's not loading. What's the crack? It should be able to sort it out for you. But let me know what's everyone's thoughts. What's the market going to do? Obviously, throughout today, we have pumped. Well, throughout since last night, really. Obviously, we've had this strong move up on Bitcoin. Pretty much a carbon copy of this, isn't it? What we got last time. Similar sort of base formed as well here as to here. And then just rip up just hour after hour after hour. Hardly any stops up towards here. And so, yeah, copy and paste. However, all we've done at the moment is sweep the Monday high. So obviously you can see we've swept that. We did manage to get above the monthly open, but now we're back below. So we're getting a sell-off on SPX as well. So things could get ugly pretty quickly if this doesn't turn around. Things could get ugly quite quickly. But Stonksy has been smashing it. Obviously, this is on the 5-minute chart. As you can see, it turned green last night. Also got the bullish confirmation arrow here. Obviously on the 1 hour as well. But the 5-minute chart went first. And as you can see, caught the downtrend very nicely as well. So if you do want to get access to Stonksy, you obviously get full indicator access. You get access to the Discord and you get access to the trading bot as well. You get whitelisted for that. You can click the link in the description. That's the second link. And you get 20% off when you use code BOT20. So I'll put that in the chat as well. So BB has just asked how much for Stonksy. Well, click the second link in the description, my friend, and then use code BOT20, so BOT in capitals 20, there it is, and you get 20% off your first month of the monthly plan. So that will take it down to £116. That's 116 for the first month. And it's on a rolling contract as well. Rolling contract. It's on a rolling plan. So it's not like you're signing up and you're tied in. You can come and try it for a month. Come and sign up. But yeah, take advantage of that. Bot20. We'll DM you in a bit. Yeah, mate. Just drop me a DM. Good evening, my good friend Wiz. How we doing? Shorted the shit out of Fartcoin. Very nice, mate. Nice pump XRP. Yeah, nice little news pump on XRP. Do make sure we all drop a big thumbs up on the stream now. We've got 20 minutes until until the decision is out. Obviously, the likelihood is, and it's a very strong likelihood, that it's going to be no change, which could produce a nothing burger. Obviously, 99% probability that the Fed hold the current rates and a 1% chance that they reduce by 25 basis points. But never say never. You know, it's very highly unlikely. But where there's a 1% chance, there is a chance, isn't there? Oh, look at that. What a spring back from Bitcoin there. Okay. We're getting some volatility coming in. We are 20 minutes away. And then don't go anywhere. After the rate decision, we're going to be waiting on Powell. So I believe we should have him come on here, shouldn't we? Should be live streamed from here, yeah. So there's that press conference. So we should have, so we'll have Powell come on here as well afterwards at 6:30 UK time. So that is in 50 minutes. And we'll see what Powell's got to say and how the market digests him opening his mouth. But yeah, BB, and for anyone else wanting to get Stonksy, you can get 20% off your first month when you use code BOT20. Do go check it out. It's the second link in the description. Do sign up. Okay, yeah, getting a bit of a funny price action, aren't we? Coming into... Still got 20 minutes to go. I've also loaded up Walter Bloomberg as well. Because while we're not... For any parts that we're not watching the live stream, he puts in pretty much the most important quotes. So we'll be able to catch up on them as well for any time that we're not watching the live stream. But yeah, getting a bit of volatility coming into Bitcoin now. After a huge run up. But let me know, what are your thoughts going into it? Let me know your thoughts, guys. Obviously, we've been pumping all today. Do you think that the pump is going to be undone and we're going to dump? Do you think we're going to carry on and pump very hard, very fast? Do you think we're going to pump then dump? What are you guys looking at? And let me know. I've got a couple of scenarios which I went over before. And if you are in the stream and you don't normally come to my streams, do make sure you come and stream every single day. I was on stream before for 2 hours. I stream every day for 2 hours. I stream the hour before US market open and the hour afterwards. So we get any sorts of data. So CPI, PPI, all that good stuff, NFP. And then obviously US open, the market open, and then what Bitcoin does, and the S&P 500 and everything else after that. But this is the first time I've streamed FOMC. So big thank you for joining me on my first one. And it should be lots of fun. I was looking yesterday, so obviously we've got today. Then the next one will be in another month and a half. So we skip April. So there won't be another rate decision until the 7th of May. Up to now, the odds are that they will hold rates in May as well. But that could drastically change depending on, obviously, what Powell says today and then how economic data comes in between now and then. And a 16% chance that they will, that rates will be 25 basis points lower come after May's meeting, and then so on and so on. But yeah, there's not really any point looking at these. But if we do look at December's, which is obviously a long while away, but the highest probability is that the Fed will cut 50 basis points, so 0.5% between now and the end of the year, and be at this figure by the end of the year. But again, everything will change. So let's see what we're going to happen. Want to nuke personally, bring the blood. Mate, I don't. I want to get long. So I want to get long. I want to get short first. But I want it to come up in close to CME gap. So I want it to come up into here. I want it to take out liquidity above here. So up into here. And then back down. That's what I'm looking to trade. If we can get a sweep pretty much around 87 and then start to show weakness, I will slam it. If not, I believe we're probably coming into this 89k region. And then again, same scenario. Come into here. If we show weakness, slam it. If not, then we're going into there. We could always go down from here, like Wiz says. We could always go down from here. I mean, this has been a very slow and steady, controlled build-up, hasn't it? Who's to say we can't just go, oomph, see you later. Anything can happen. So it's just got to plan for it. At the moment, I've got no plan. For me, when we're looking at it like this, if you see, so this area here, 84k. So where I've got this green box, and then look at the monthly open as well. This is in red here. This has been capping upside alongside when prices got above this zone, when it's got above 84k. The monthly open has also been capping upside, or prices deviated over it and got back below, and then nuked. Now, obviously, we've had a series of higher lows here, but I think if price gets nuked here, I think we'll more than likely come and run this low. I think it probably gets a bit ugly as well, to be honest. But we'll see what we're given. You can only plan, can't you? You can only plan. And obviously, we'll see what Stonksy says. Maybe if momentum runs out on the 5-minute chart, that's a worrying sign. Who knows? But yeah, like I said before, if you do want to get Stonksy, you can get 20% off your monthly plan. If you're a new user, your first month with code BOT20. Do go check it out. Hello again. Hello, my good friend. How are we doing? How are we doing, my good friend? Relief rally after weeks of down. It's definitely possible, mate, yeah. Definitely possible. I assume that there will be plenty of upside liquidity to run. So we could definitely see a relief... I can't speak. A relief rally, yeah. Like I say, that's what I'm looking at to the upside for potential to see where price trades into it and the reaction. Dave's been waiting since 2002 to get rid of his spot. Oh, mate. Well, they're all gone, aren't they? I've already sold them all, apart from Soul Season. They all went after we broke below 90k the second time. So I'll show you exactly where. They're all gone. Here. So obviously we broke out of the range here. Then we got this push up on the Trump candle. Now I didn't short this. Obviously in hindsight this was just an easy short. I didn't short it. But as soon as we started to break below this range, everything went. So I'm not I'm just trading at the moment. And to be honest, I like it. I kind of like it. Been trading Bitcoin. Obviously, had a great ton trade over the weekend. So, yeah, for those of you that want to get into the Stonksy Discord, obviously, Wiz has been putting in some great trades recently. That's Wizard of Alt in the chat. But I put a message into the chat on Friday saying that I was picking some ton up around here. It was around 280. And then, obviously, since then, we got that huge pump on the weekend. And, yeah, a good handful of users followed me on it. So, you know, they was up 20, 25, 30%. So, yeah, there's plenty. It's definitely at the moment a trader's market. It's definitely a trader's market. So, if you do want to trade anything, click that first link in the description, sign up to BLOFIN. Set up a long from 76,500. Probably not getting there tonight, though. Yeah, Zane, that's an interesting level for sure. Let's see. Yeah, I don't think we will get there tonight. That would be one drastic sell-off. 76,500. Okay, yeah. Well, yeah, I mean, you can definitely see that. A sweep of this low and then get back above and then go, yeah. Definitely. Yeah, not a bad shout at all. Sweep this low. Obviously, take liquidity from below here. And then most importantly, then what would you do? You'd leave all these people that are waiting to buy this zone. So the people that are waiting to buy the retest of the previous range high, which lies around this area, doesn't it? 73, 74k downwards towards 71. You'd leave all them with unfilled bids then. Just sweep this low, get back above, and then bang, bounce back to the upside. So yeah, definitely one potential outcome for sure. And we do have 10 minutes to go. 10 minutes to go, so do make sure you're liked, subscribed, and let's get ready for it. Obviously, Bitcoin's had a bit of downside price action coming into it now, which, you know, isn't anything unexpected. We've had a solid run up today. Got 56 people watching on YouTube. Big thank you to everyone who's joined the stream. Do make sure you drop a like, subscribe, and let's get ready for it. Let's get ready to rumble. We're ready for it, aren't we? We're ready for it. But yeah, if you're wondering what this indicator is, this is Stonksy. Obviously, maybe you've seen me on YouTube, or maybe you've seen TMG post it on Twitter or use it on his streams. And you can sign up with a 20% discount today using code BOT20. So that's BOT, B-O-T in capital letters 20. And that gets you 20% off your first month. So the month is a monthly rolling plan. So you're not tied into any contract or anything. And you can find that link in the description. Do you know what? I'm going to just put that next to... I'm going to put that... Oh, I can't, can I? Oh, well. It's fine. We are struggling. We are bouncing off the Monday Asia high at 83,900. If we hold that, I reckon bounce off. If we break through, I'll be shorting. Mate, I want... hey, yes, easy Kev. How we doing, mate? Thank you very much. You know what? You legends that have been in the stream twice today as well. You're the real ones. Thank you very much. Thank you very much to everyone who's joined today. But yeah, to the people that's been in twice, obviously I streamed normal time before and streaming now. Crypto Pappy, how we doing, mate? How we doing? Thank you very much for joining me tonight. We've got 9 minutes to go. 9 minutes. But yeah, James, I'm kind of hopeful that I want it to come up and fill the CME gap. And sweep 87k is where I'm looking for a potential trigger. Will we get it? Maybe not, maybe. Let me just check that my BLOFIN's logged in. Yeah, okay. Also, for any of you that are on BLOFIN, I got an email before and they've given me $30 USDT in trading funds. So for those of you that are signed up to BLOFIN on the Stonksy link, check out your BLOFIN. I got given $30 to trade with before. And they're really good like that, BLOFIN. So, yeah. Those of you that are in probably have got a little bonus as well. Who doesn't like double dipping? Well, that's it, isn't it? That's it. Couldn't agree more, Aqua. Couldn't agree more. Dave, burning crypto. Learning for it. Oh, Dave, being in crypto, learning for a year, never traded. Hopefully, Stonksy is my future. Yes, Kev. Well, it'd be great to see you over here, mate. It'd be great to see you over if you're not already signed up. You know where I am, mate. You know where I am. I got that too. What was the $30? I think it was just a trading bonus, James. I think it was a thank you from BLOFIN. So, but it is only valid for 7 days. So use it. So use it if you can. If you get a trade come up, obviously, don't just. Oh well, you know all too well. You know how to do it, mate. You know how to do it. But yeah. If anyone who does want to sign up to BLOFIN, it's the first link in the description, and I've just put it in the chat as well. Best exchange. And that's where we'll be taking a trade today. If we come into one of the levels that I'm looking at, I want it to come into here. Now, will we do that based off this announcement? It's questionable, isn't it? It's questionable because they're not really going to do anything unexpected. So we can only wonder. You should pin the link to the chat. It's a good idea, that actually, Aaron. Give me 1 second. Give me 1 second, legends. We've got 6 minutes to go, so I will have it back up right now. 1 second. Let me just load the stream up on a separate window so I can do that. But yeah, let me know in the chat. Is anyone in any active trades at the moment? Has anyone got a trade open? And you're just riding into FOMC with it open, like a boss. Alright, there's that. Let's see if I can pin it. I never thought about pinning it. Good shout. Good shout, mate. Let's see, can I pin? Pin message. You are a legend. You know what? You are a legend, my friend. Right, I'll tell you what. Let's get a quick poll on the go. Hang on, let me share my screen again. Let me share my screen. There we go, there we go, there we go. Right. Right. Get your vote get your vote on the poll now. Get your vote on the poll. Let's see what you think. Up or down after 6 o'clock. Get your vote in and we'll see. Right, let's get back to it. Let's get back to it. We've got 4 minutes to go. Ooh, 4 minutes. Yeah, it says, okay, so you're in a trade. You're long from XRP at 193. Well, you've had a good day, haven't you, Short Video Guru? You've had a great day, given that XRP news. Fantastic stuff, mate. And you're long on Sui as well from 202. That's a great trade as well. Lee Isherwood is long as well. What are you long on, mate? Well done to you guys. But yeah, that is fantastic, mate. Given XRP's price movement today, no doubt you're thrilled. Right, what have we got? We got 3 minutes to go. Ooh. Exciting times. Exciting times. And we are coming back up as well. If you notice, we've come down and we've retested this zone again, which has been the key pivot point, really. Besides getting above the monthly open, when we've been above this zone has been where upside has been capped. So, what are we going to get? We've got 2 minutes. And then we've got half an hour then until we wait for Powell. My savings are long gone. Does that count? I suppose, mate, yeah? I suppose that does. Pepe, Sui, Ondo, Bitcoin. Very nice, mate. Very nice. Well, hopefully, everyone who is saying that they're in a trade is still in a very good position after 6 o'clock. Let's hope so anyway. Do make sure, for you people that have just joined, I see that the viewers are going up, got 60 people now. Do make sure you drop a like on the stream, subscribe, come back every single day. I'm live every day. An hour before US Open, an hour afterwards. Do come and join me. Here we go. Got 1 minute 40 now. So we're on the countdown. We're on the countdown now. What's S&P 500 doing? So the S&P 500 has a sell-off as well. After getting a little rally today. It's now back down towards... pretty much down near towards where it opened. But Bitcoin is trying to stay resilient. So we've got 1 minute. We've got 1 minute. Everyone hold on to the hats. Hold on to your hats. Hold on to your seats. Hold on to your mouse. Hold on. I was going to say hold on to your trade, but I suppose that might wander into a different lane. That might wander into giving advice that I'm not eligible to give. Aqua is short from 84,760. Very nice. Well, Aqua, you've got a lot of room, haven't you? Have you put your stop loss to break even or something now? Or are you just going to ride it in there? Right. It's showtime. It's showtime. Is everyone ready? Is everyone ready? 30 seconds. 23 seconds. Come on, then. What are we going to get? 15. Well, and we know what we're going to get. We're going to get no change. But what is the market going to do based on that? Or is it going to do nothing? It'd be a bit boring if we got a nothing burger, wouldn't it? At least give us some excitement. 3, 2, 1. Bang. Oh. Oh, we're going up. We're going up fast. We're going up fast. Oh, we're going up fast. There we go. What did we get? This guy normally tweets it out. No, he's not tweeted out. What did we get? We definitely got no change, surely. What did we get? Yeah, unchanged. There we go. There he is. Well, that's no surprise. I mean, what have we done? We've come and swept this high, haven't we? We've come and swept this high. What's SPX doing? So SPX has shot back to the upside as well. But so the question now is going to be, do we get continuation of the trend? So obviously the trend today has been up. Now, are we going to get continuation of that? Or has this just been a liquidity sweep and then we go down? What's ETH doing? ETH obviously strong today, 5.5%. Ooh! ETH had a nice little pop there, didn't it? 2064. ETH outperformance today as well. Now, if you notice something, I don't know if anyone else has noticed this or seen anything reported about this, but each time ETH has outperformed Bitcoin decently, it's normally marked a top. Now, not to say that that's going to happen this time, but it has happened quite a bit. XRP is still up there at 9%. Why is it not clicking? But Bitcoin, oh, that's a big old 5-minute candle, isn't it? What a big wick that is. Yeah, no change. Marked up inflation. Get ready for watching Jerome Powell stream, Dave, in 30 minutes now. Yeah, I've already got it. I've got it ready. It's already ready. Ready to go on. Fed to slow, balance sheet runoff, revision to GDP forecasts, uncertainty around the economic outlook has increased. Let's see what our good friend Walter Bloomberg has posted. US interest rate futures pricing 56 basis point cuts in this year after the Fed holds steady. So that's what we were looking at before, wasn't it? Yeah. That's what we were looking at before in the December forecast for this year, is that it was forecasting that the highest probability was that the Fed would cut 50 basis points this year, which isn't a lot, really. You know, it's pretty much, you know what they're going to do. They're not going to do a 50 basis point cut in one go. They're going to do 225s. Fed to slow, balance sheet runoff starting 1st of April. So not massive, not massively bullish or bearish either way, really. Not massively bullish or bearish either way. But do make sure you drop a like on the stream, subscribe. We've got 65 people watching, so big thank you for joining today. There's a little pinned comment on the chat as well. Do sign up to BLOFIN. And you'll find all sorts of nice links in the description as well. So essentially, all we did upon announcement was we came and swept today's high and then dumped back down. So now we wait 25 minutes for Powell to start speaking. Are we going to dump into it? Wales will play, says now. Yeah, that's true. That's true. Use the one on the Fed website. If you Google Fed Live, that one is better as there's no time delay. Okay, I'll have a look at that now. We are selling off on Bitcoin. We are selling off on Bitcoin now, which isn't ideal. Let's see. Let me pull up this live stream. So it is, what's it called? Fed Live. Okay, let's see. The Fed Live video. Ah, there we go. We have got it. Smashing. Thank you very much, Jordan. And we are selling off on Bitcoin. Let me get my screen back up. We are coming down now as we was before. So pretty much a big, massive nothing burger, wasn't it? Which is what we kind of expected because the Fed was never going to do anything unexpected. So now it's a question of, do we sell off into the conference and then pump after the conference? Or has this just been one big baited run-up and now we nuke? Why is your green screen so aggressive today? I think it might be a case of what I'm wearing. I think it might be this jacket. Is my guess anyway. My guess is it might be the colours on this jacket that I'm wearing. Apart from that, I'm not too sure. But that is my guess anyway. But then again, I don't know because it's not covering up this side. It's not blurring that side out, so I don't actually know if that's not the case. The unemployment rate forecast nudged up slightly from 4. Wizards providing all the information here. The end of runoff starting 1st of April isn't surprising given the debt ceiling issues that have been discussed. We think once QT ends, it'll be difficult to restart. Yeah, they're not exactly laying out the dovish runway, are they? They're not exactly laying out the dovish runway, that's for sure. But what will be interesting is, so obviously we've had this rate announcement. We've obviously got Powell coming up in just shy of, well, yeah, just under 25 minutes. After that, we're free again for another month and a half, barring economic data, so barring CPI, NFP, you know, the usual things that come across every month. We're free then from another FOMC meeting until the 7th of May. So I've got about 6 weeks to go. So does that give the markets enough time to rally, potentially, until the Fed then comes at it again? Or will they just continue to trend downwards? Thanks, FOMC, for the short entry on 1 inch, says Jalapeno. Jalapeno is spicy tonight and short in 1 inch. Well done, mate. The committee will be prepared to adjust the stance on monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Pretty much, if anything really bad happens, They're ready to adjust rates, like, as an emergency. Which is not surprising. That is standard, isn't it? The whale who was shorting Bitcoin with 40x leverage is now doing again with Bitcoin and ETH. Yeah, ignore that guy, man. Ignore that guy. Don't follow or... I mean, I suppose it's interesting to take note of, isn't it? But in terms of trading, don't follow what that whale is doing. It's one of those Fed statements where they warn of economic outlook while also saying inflation remains. Yeah. Pretty much, they're firing off very tame warning signs, aren't they? They're firing off very tame warning signs saying, this is looking a bit cooked, but on the other hand, we will adjust if we need to. Managed to open a nice short at the top of that wick, 84,800. Move stop loss to entry. Yes, big ads. Yes, mate. Well done. It's what we love. Anyone else able to catch the top of that move? But we've had two very interesting. So if you notice, what did we have after 6 o'clock? Well, we had price come up and take out the daily high. And then we've had price come down and take out the low of this dip that we got leading into the rate announcement. So pretty much we just got two liquidity sweeps. We got a sweep to the upside and then we got a sweep to the downside. So, yeah. As expected, the event used as a catalyst to liquidate people, pretty much. But we are going back to the upside now. So, are we going to 20x short and 10k at the top of XRP and SUI? Well done, PL. Well done. Well done. Hopefully you've banked some nice profits, mate. Just in case. Bitcoin's looking a bit frothy here, isn't it? Is it going to get slammed again at the monthly open? Look how long it... I mean, it took it ages to try and get above it anyway, but look how long it took it today just to get above the monthly open. It's key resistance. And again here, struggling. But ETH is still up 5%. ETH is still up 5% today, so really good day on ETH. Sol, $130, up just shy of 4% now. And for anyone who missed it, Sol ETFs are launching, some of them are launching tomorrow, which has gained zero interest from the market. What else is up nicely today? Uniswap's having a good day. Caught lovely by Stonksy as well. Caught lovely by Stonksy on the 5-minute chart. So for those of you that do want to get Stonksy, what do you get? Well, you get full indicator access, you get Discord access, and you get whitelisted for the trading bot, and you can get 20% off your first month of the monthly plan using code BOT20. Now that is in the description for you, the link and the code. Come and give us a go for a month, 20% off. You can't complain with that, can you? What a deal. What a steal. Come and give it. And say hello in the Discord when you come in as well. Come in and say hello, tag me. And say, I came from one of your streams, or I came from the FOMC stream. It'd be great to know who's signed up based on this stream. Dupe's up nicely today as well. What's that up 8% there? LDO's up. Fantastic day on LDO. Woo! Yeah, what a rally on LDO. Starting from last night. Woo! That's some good price action to the upside. Okay, so Bitcoin is trying to make its way back upwards now, isn't it? It's trying to make its way back upwards. The dots were a little more hawkish than our expectations, which we thought would see a slightly more dovish plot. The Fed seems to worry about inflation expectations. Thank you for giving us all these quotes, Wiz, as well. By the way, very, very useful and very handy. Thank you for putting them in the chat. ETH is starting to lead the way, I think, says Lee. Sounds like QT is slowing from what I see on X. Yeah. I mean, you can look at it two ways, can't you? You can look at it as QT slowing and he may be ready to slowly transition into QE. Or are they expecting something really bad to happen to the point where they're going to have to instantly just stimulate the economy? Fed says it will slow the pace of runoff of its securities holdings beginning of April by reducing the monthly cap on Treasury securities redemption from 25 billion to 5 billion. Very good. That's good. But Bitcoin's getting a nice response now. We've got 15 minutes until Powell starts speaking. And we're getting a nice push up on Bitcoin. What's the S&P 500 doing? Push up on the S&P 500. Personally, I want to short 87k if we get there. This is my ideal scenario here. But I'm also interested in all these as well. So we'll see. We'll evaluate when we get to if we get to each one this week. So if we come into here, we sweep 87k, we start showing weakness, bang, slam it. If we don't and we carry on strong, we'll evaluate again at 89k. Well, I'll evaluate. And then again, if we just carry on blasting through that one strong, it's time for another range low test. But until then, we just have to wait, don't we? We've just got to wait. Cute says now. Thank you very much. 87 coming very soon, Dave. Yeah, it looks like it, mate. Looks like it. It looks like we potentially might get it tonight. Are you going to put the speech live? Yes, Felipe, I am. I am going to have the speech. We've got 62 people in. Do make sure if you're one of the new people, you drop a like on the stream and you subscribe. And click that link that's pinned on the pinned message in the chat and sign up to BLOFIN if you want to do any trading. The best non-KYC exchange out there. So yeah, just sign up with an email. You can use it anywhere in the world with a VPN. Good to go. But yeah, I have got the window prepped ready. So we'll be going on it from 12 minutes time when Powell is due to start speaking. I think I need to get a drink. Hang on. I'm still here. Just going to grab a drink. But that wasn't as bad as it could have been, really, was it? I mean, for anyone in a position, that was quite good because price didn't really go anywhere. Obviously, if you're in a long now, looking even better because we're pumping back to the upside. So, all in all, there wasn't really much to shout about. But if you had a position open, that's pretty good, to be fair. And yeah, we got just shy of 12 minutes. Right. Let's get ready to rumble. What have we got? These probably won't have updated now. No. Let's see. I think that actually has changed, hasn't it? Maybe it's not. I don't know. Let's see if good old Walters tweeted anything else. Swank. Fed won't cut until early 26. Who's Swank? Low probability for Fed to cut in May. So whoever this Swank guy is, I'm not too sure. 4 Fed officials expect. Oh, okay. So I'm guessing he's one of the Fed members. 4 Fed officials expect no 2025 cuts versus 1 in December. Interesting. But it looks like we're maybe going to just carry on chopping in this range between the Monday high and this zone here, which is now looking like it's flipped to support for the time being. So maybe we just keep chopping in here, low time frame, until Powell's done speaking, maybe. Swank is from KPMG. Personally, don't think this is a good Fed. Hints at stagflation. Well, to be fair, this is something that we've knew for a while, isn't it? We've knew for a while that long term, but over the next few years, it looked like the chickens were going to come home to roost for the US, which is looking like it is anyway. So it doesn't really surprise me anyway, because obviously it's something I remember, back when we used to do the CSE lounges, it's something that we used to talk about a lot, where it's like me, you, Justin, K, everyone in there used to talk about, how the markets were going to be, over the coming years. There's definitely caution on their side and worry, because make no mistake about it, the Fed, the US is not in a very good position financially at all. I think this is a message to Trump that this can't go on. Probably. Well, Trump wants rate cuts, doesn't he? That's the thing. Trump wants rate cuts, and they're not going to give him to him because Powell wants to see the job through. So Powell's set on seeing the job through and doing a proper job, where Trump would probably happily slash rate cuts right now if he could. Speaking from experience, Dave, do a sound test now with a random video on YouTube to check we can hear what Jay Powell says. Yeah, we'll do. Let me pull something up. Tell you what, let me turn the background music off. So let me turn that off and let me load up. Let me load up something. Let's just pull up a Stonksy video. Right, just tell me. Well, actually, it's no good using my sound. It's no good using my voice, is it? Because you might not be able to tell the difference. You guys tell me if you can hear this. So you should be able to.
Great ideas can come from anywhere.
So let me know if you guys can hear this.
You decide where they go.
So So you guys should be able to hear this now.
So I'm looking at this right now. I'm going, we could buy the dip. In all likelihood, we probably will.
Let me know if you can hear it.
But I'm not going to be buying the dip here with my money. I'm looking to make a much kind of bigger, more long-term play, which means that even if we do bounce today, we might unbounce tomorrow. I just get the vibe off the market. Things are looking a bit like floppy. He's been doing this for a while now. You know when he goes down, when Bitcoin starts going down, and it goes down, and it goes a bit more down, and a bit more down, and a bit more down. And you're like, damn, why isn't it bouncing? And there's just like no bounce, and eventually he goes, bam, and he did that the other day. Like, it probably is gonna do that again, because.
So that good from where I last had it then. That's good. Okay, good. Thank you very much, everyone. These forecasts may be already out of date soon, given that the next time Fed meets, we will have detail on planned reciprocal tariffs, which could shift the economic outlook. That's true, yeah. That's true. Sounds perfect. Yeah, well, I thought there's no point me putting myself on. There's no point me putting myself on, is there? Because you're not going to be able to tell the difference if I'm speaking and then I'm speaking on video as well. Yeah, so we're all good. Okay, so big thank you to everyone who sound tested that for me. It was a good job you said that, Jordan, because I didn't think of sound testing it. So we've got 4 minutes to go. Let's see. Okay, let's just leave that off. So we've got some warm-up music. Yeah, we've got some warm-up music from the Fed there. Bitcoin, yeah, again, it's just, I think we're probably now, I think pretty much what the market is waiting for is just for this to be over, isn't it? I think the market is waiting for this to be over so it can take direction, or maybe it just goes sideways. But it potentially looks like the Bitcoin is waiting for just this event to be over, so then okay, it can continue on upwards, or maybe drop back down. So we haven't got long to go anyway. We've got 3 minutes. We've got 3 minutes to go. Right, we've got 3 minutes to go. Yeah. Okay, right. Deutsche Bank Economic. Wiz is feeding us, isn't he? He's feeding us the information today. Dave, can you have the Bitcoin price at the side of the live? Yeah, I think actually I could. Yeah, hang on. I think I probably could. Just hang on. Should be able to. Where is it? Forget. Right, let me remove that. Yeah, right. Okay, hang on. Share screen, entire screen. Share. Yeah, there we go. Right. Good idea. Good idea. Whoever said that. Was it you, Lee? I think it was you, weren't it? Good idea, my friend. Yeah, we can. Right, we've got 1 minute to go. Well, 40 seconds. So we'll watch good old Powell, and then we'll see what he's got to say. What we've got going on? Elevator music. Yeah. You're a good man, Dave. Massive respect. Well, no, thank you, Lee. Thank you for the suggestion. That was a really good suggestion. So we'll have that on. We'll have Powell speaking, and we'll see what Bitcoin does based on what he's saying. And we will rock and roll. It should be coming on in. So let's get ready. It's terrible music, isn't it? It's terrible music. Does it make you feel serenaded? He's usually late. Yeah, I probably will be late, won't I? Are we coming on then? Come on, JP. Let's go. Let's see what the rest of the market is doing. We got ETH. Has that come down a bit? A little bit. XRP still up 8%. Sol up through nearly 4%. Yeah, pretty much the market is not doing anything, is it? It's just waiting. Oh, here we go. Oh, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard Schneider with Reuters. Thanks for your time. So,
Well, there we go then.
sort of the real side here, inflation and then GDP.
There we have it. Nothing too major, was there? There was nothing too major. I think it's just going to be asked questions, and he's probably just going to repeat himself, isn't he? No, man. Questions, that's the most important bit. Okay, we'll watch the questions.
Inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also frankly a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation.
Save with crypto, there's your well-anchored bingo card checklist done.
We can find in short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. That's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
He wants to see the job through. He's not going to move unless he sees a reason to.
Define price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are going to run price growth? When you see buy in advance psychology, big changes in inventories and surveys to show consumers, at least in the short run.
That woman wearing two masks behind that guy there.
I do.
Pretty sure it looks like she's wearing two masks.
In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs. So you're not seeing people losing their jobs, but you're seeing the people who don't have a job having to wait longer and longer. And, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low hiring situation, and it seems to be in balance now for for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaning. How far that will go, we'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers just they just kind of followed the crowd and raised it. So things happen very indirectly, and so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last
pandemic? Yes, during the pandemic.
You could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course we're well aware of that, and it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And
Bitcoin's going for it. It's going for it, innit?
To take on
conference is nearly over, so
allow prices to go up.
There's the runway, I suppose.
Businesses are intending to pass many of these prices through, so it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months, a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Chris.
Hi, thank you, Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like. We force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There is a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully. And we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made and they're going to be implemented, and then we'll know. at that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year. And we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that. And the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was...
or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero. And you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal? What that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, it's something that was, in the service sector that was far away from anything that's tariffed. You might think, okay, well, that is, like, frankly, housing services inflation, which by the way has been behaving well. Which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth, but higher inflation. And they kind of balance each other out. So you think And unemployment is really, they're really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth.
Make sure you drop a like, subscribe if you're new. If you want to trade anything on this Bitcoin pump, click that link in the pinned comment on the chat.
Highly uncertain is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that. And we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast. And I was just wondering what that's.
Interesting, obviously. His comments are just reiterating what we already knew and what he's already said. It's interesting, obviously, when people are asking him about data, because obviously he provides a very good explanation for it. He doesn't hop around. He's not really a politician. He doesn't hop around and try and jump around. He gives a direct answer to why is each thing and why is each thing saying that or what someone is asking. So he gives a good response and a good press conference. But overall, it's the case of the Fed wants to hit its target. Powell wants to see through the mission. And they're not really going to waver unless they're forced to by whatever may come forward to force the hand into adjusting policy, which is interesting because, obviously, like someone's just asked him then, it's priced in for a 50 basis point cut by the end of the year. But obviously, given his comments today, maybe that shrinks down to a less possibility. Shorts in place and clocking off for the evening. Have a good one, says Wiz. I'm still waiting to short. I think I'm going to fire off anywhere around 86,800. Have a little go if it gets there. Let's widen this back off. But obviously since we was watching that, like I said before, wasn't it? It's exactly what I said before. Bitcoin was kind of just waiting for the green light for pretty much the conference to be over or nearly over and the event to come to a close before it goes. And then exactly that's what happened. Mine triggered at 85,600. I'm looking for the CME gap close, to be honest with. I want the CME gap close up at 86,400. And then I would like this liquidity to be cleared out above here around 87, but we'll see. But Bitcoin's obviously been pumping. The rest of the market is reciprocal of that. ETH's still having a nice pump. XRP, Sol is now up 6.5%. So everything's pumping. Obviously, Bitcoin's coming into a key zone. We've got a CME gap closure at 86,420. So Bitcoin's making its way up there. Do make sure you drop a like on the stream, subscribe. Like I said before, if you want to trade anything, do click that first link in the description. Sign up to BLOFIN. It's non-KYC. So it's the best exchange for you to trade on, whether you're buying and selling your spot, obviously trading futures, or if you just want to hold any funds somewhere. And big thank you for joining me today. Obviously, I've done a double stream today. Streamed earlier, as usual, for US Open and stream now. So, first one of doing FOMC. So, big thank you from me to all of you for tuning in and joining. We've still got 44 people watching, which is great. And for those of you that are interested in this indicator, obviously, what is this on the screen that caught this long up from here and caught the long up from Bitcoin even lower on 5 minutes? It is Stonksy. So, you get full indicator access. You get Discord access, so access to the Discord server, and you get whitelisted for the trading bot as well, which is on BLOFIN. And you can get that for 20% off on your first month if you're a new user. So the link to that is in the description. The code is also next to that link. So do click that and sign up, and it'd be great to see you. If you do join, do make sure you say hello in the Discord and say that you came from the FOMC stream. It'd be great to know that someone signed up from the stream. And we can answer any questions that you need to in there. But yeah, obviously Bitcoin is still pumping, continuing its daily pump here. Strong move. And as it looks like it's going to go up and close this CME gap up here, potentially. Where is the CME gap here? So the CME gap is coming up now, coming up hot. So yeah, big thank you for joining me today. I appreciate it. And I'll catch you all tomorrow for my stream. I'll be back, obviously, on usual time tomorrow, as I was today. So yeah, enjoy the rest of your evening. Hopefully you've profited from this trade. If not, get Stonksy in the description for your 20% off using code BOT20. I'll see you over there. And yeah, make sure you do your trading on BLOFIN. But yeah, big thank you to me. Well, to me. Big thank you from me. I've had some great viewership today. You know, still, I think we reached 65 people on a stream, which is the most in a while. So yeah, big thank you for joining today, for watching the FOMC reaction and Powell's speech and questions with me. Have a nice evening, and I'll catch you all tomorrow. Bye-bye.